Hey guys, welcome back to Charlotte Mortgage Insights. Hope you guys are doing well today. So, the Fed just met in June and they did not do anything with the Fed funds rate. And we learned that there is a new sheriff in town. And we're talking about Kevin Warsh. He is the new head of the Fed. And we've got a lot of swirling news out there of his philosophies, what's that's going to do for the Fed funds rate going forward, how that will affect mortgage rates, how those two are connected in general. And a lot of things came out of that meeting that we just want to bring to you guys so we have clarity on kind of what to expect as we move forward. So, Stephen, you probably watched the press conference as well with Kevin Warsh. Your takeaways from his philosophy, what do you think about all that?
Yeah, I think it was, to me, it was impressive. I really appreciated, his energy and, the feds did not, cut rates. That was expected. And just as a reminder too, the Fed funds rate is a number at which the banks trade money, and that's a bank number. So a lot of times, even like that, people are like, dang, they didn't cut mortgage rates. No, and that wasn't mortgage rates, right? There's a disconnect between mortgage rates and the Fed funds rate. So they're correlated, right? The Fed kind of sets the tone for what's happening in the economy, but mortgage rates are specifically controlled by the bond market. And that's a different variable. That's a different set of data. So what the Feds do, their decision, they're trying to control inflation, right? That's their number one job, but they do have a dual mandate. So I think Warsh came out and he really focused on understanding the current data and has less emphasis on forecasting what is going to happen. And he's kind of like, hey, if we understand what's happening now, we will know what's going to happen. And he, kind of down credited the dot plot system. Have you heard about the dot plot system, Brian?
Yeah, so that's basically when all the Fed members vote on their projection into the future of what they think rate cuts or rate hikes will be going forward. Is that what you're talking about?
Yeah, each Fed voting member kind of gets to put their opinion, right, or what they want to happen, I should say. And so what Kevin Warsh did is he was like, he didn't even vote on the dot plot this last meeting. That's how important he thinks it is. And I think half the room wanted to cut, half the room wanted to hike, and there was one person that didn't want to do anything. But what Warsh said is, I want to create task forces so that we understand. So he wanted to create task forces on Fed communications, Fed balance sheet, data, more importantly, like evaluating new data, methodical changes, more accurate in contemporary data so that they understand what's happening, productivity in the jobs era and AI, and then the Fed's inflation on framework. So that energy is kind of buying some time so that they can say, hey, before we make cuts or hikes or do nothing, let's really understand where the economy is. And at first, the markets didn't like that because everyone wanted a cut, but he's basically saying a cut might not be the right answer. It could take us in the wrong direction. So in a nutshell, now that we're a couple weeks past that, as we're recording this video, the market's actually, understanding the energy behind that. But all in all, I think it was a pretty impressive, opening meeting for our new Fed chair there.
Yeah, and I think one of the takeaways that I took away from that as well I think that there's been this theory over the last little while that a lot of the data that the Fed gets to make these decisions on whatever is kind of lagging. So maybe they're going to reevaluate other ways to get more real-time data, because sometimes I think they're making decisions on data that may be a month or two old, right? So it's like
Well, and it's very important. And so going back to the connection between when the feds make their decision and what happens to the bond market, right? So the jobs data, let's focus on that for a second. We'll get a jobs number and the market's expecting, a fill in the blank number. And we get a number that's drastically different from that today. And the bond market says, that's not what we were expecting. And mortgage rates actually go up. Well, then 3 weeks to 4 weeks later, we get a correction on that jobs data, and it's actually the exact number they were expecting. Well, we've just taken a month of real time energy and bond and market activity, and it was skewed. If the right number would have been reported the day it was supposed to, it would have been a totally different story. So that credibility and that accuracy is one thing that Warsh, I believe, is really going to focus on. And that's super important for the home buyers out there because that's the correlation from what happens with the feds to actually is my rate going down. It's what's happening in the bond market.
Yeah, for sure. So a lot of people think that when the Fed cuts rates, that mortgage rates automatically follow. And I believe you probably get way more phone calls than I do when that happens. But we have seen multiple times over the last couple of years, the Fed cuts rates, but mortgage rates go up. So the correlation is, like you said, is not the same.
Yeah, in one analogy that kind of helps me understand it, and most people have a thermostat in their house, right? So the Federal Reserve is like the thermostat, right? It controls the temperature. But just because you drop that thermostat, it doesn't instantly make every single room colder or hotter, right? So the Fed is controlling the temperature, and then the bond market is one specific room, and it does move off that thermostat, but it regulates itself. And so the narrative that I want the consumer who's watching this, the home buyer, the person watching rates, when you hear, because there will be a cut at some point, and when you hear the Feds have cut rates, that does not mean call your lender and say, I want that lower rate that just happened today. That's not how it works. It may, in theory, lower them over time, but it is not an instant direct action and reaction where Feds cut rate, mortgage rates are in the fours or whatever the number might be. So the mass media, I think, likes to kind of put that narrative out there, and it's confusing. But what I want and what this channel wants to do is number one, empower and educate. So that's very important for people to understand. And we can go deeper into this if you're interested in this and set up a call or a Zoom. But the overall big picture is when the Feds make a decision on the Fed funds rate, it is not instantly real time that day, the same action happening on the mortgage rates.
Well, wouldn't it be nice if it was? The Fed cuts and 6.5 goes to 4, right?
I would love to shoot that video and tell you that that's exactly how it works. Maybe one day.
Maybe one day. Guys, if you're getting any value out of this video, go ahead and subscribe to the channel and like this video as well. It certainly helps us out a ton. If you have specific questions about your mortgage or pre-approval, of course, all of Steven's information is below. And if you need help finding your dream home, reach out to me and my team. We would love to help you as well. But guys, thanks for watching, and we'll catch you guys in the next video.